Hi everyone, a very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi and this is your daily dose of personal finance that we bring to you for 1 hour every single day. Well, first up, let's tell you what we have lined up today on the show. As you know, the moratorium period has ended on the 31st of August. And many of you may have already had to cough up the September EMI or will eventually have to in the rest of the 3 odd weeks of this month. But if you're still struggling with cash flow, if you're still facing the disruption because of your job loss or to your business because of the COVID-19 pandemic, then what are the options available before you? That's what we will be discussing today. And mind you, of course, it's extremely important to ensure that you don't also default on your loan, which could lead to bad credit rating. We'll also be bringing on board Union Bank to understand the entire loan recast bit by the RBI and the option available before borrowers who are still unable to, essentially wrap their heads around the same and go up to pay EMIs. And later on the show we'll be getting you a sneak peek of the interesting conversation we had on Friday, which was of course the eve of Teachers Day, in our very special women's segment that we have for you every Friday. So without any further ado, let's kickstart the show and introduce our guest for today. Our very first guest is Mr. Raj Khosla of My Money Mantra. Mr. Khosla, thank you for joining us today on ET. Now, it's always a pleasure having you with us. So to start with, I guess a lot of people will now have to prepare for resumption of loan repayment. Unfortunately, many may still not be able to do so. Many businesses may still be facing problems. Many people may still have not been able to find a job or whatever the reason may be. What essentially is the option now before people who are still finding themselves in this hot water situation where they are finding it very difficult to resume their EMIs?
Mubina, thanks very much for having me on, and it's always such a pleasure to be on the show. Before we get on to what are the options available for retail loans, all I'd like to emphasize once is that there's been a lot of discussion around this issue of interest on interest, which is pending with the Supreme Court. I just want to make one broad point, which is that there is this huge difference between monetary policy and fiscal policy. You can't expect monetary policy means they declared their released liquidity and made it easier, for funds to be lent out. Fiscal policy means, when they can either collect money from taxes or they can, collect money by issuing debt and then spending and creating demand thereon. This issue of interest on interest is something that will weigh heavily on everyone until the Supreme Court judgment comes out. But honestly, it's up to the government to step in, because you can't really penalize fixed deposit holders for their rate of interest that they were going to earn and say, we are going to pay you, but we are going to give relief, to individual borrowers. So having made that overall point, I just wish to say that, yes, these are difficult times, and some bank customers are bound to face problems with respect to repaying their loans now that the moratorium period is over. So first up is all those who availed of the moratorium and whose installments are not due have basically the option of either paying the same EMI that they used to and extending the tenor of the loan, or to go back to their bank and say that if the tenor is to be kept the same, what would the new EMI be? If you go to a somewhat less fortunate customer, so to speak, who has cash flow problems, he too has, in the first instance, to prove that if he seeks a restructuring, he has to prove that COVID-19 has actually impacted his cash flows. And secondly, that as of 1st of March 2020, his account was standard, which means it hadn't gone under. If he meets these two criteria, then of course, each bank will announce its restructuring policy vis-a-vis personal loans, which means either home loans or personal loans, or for that matter, credit card dues, and then has to apply for that restructuring. In any case, no restructuring is going to be possible for more than 2 years. So I would recommend restructuring or approaching your bank for restructuring as a last resort. In the first instance, try to collect as many funds that are available to you, either from family or friends or through possibly sale of some item, and remain current with your debts. Do not seek restructuring. If at all, the next step should be to consolidate your debt. Try to move, if there are some amounts that are payable, interest is accruing at say 30%, try to move it quickly down to a lower interest bearing debt. As a last resort, then you could approach, you could look at the scheme that has been offered by your bank and seek to restructure your outstandings. Lastly, I would say, always be mindful of your credit score. Because right now, if you'd avail of the moratorium, there's going to be no impact on your credit score. Even if you apply for a restructuring and then stick by the terms of that restructuring, even then there would not be any impact on your credit score. But check with the credit bureau or check with your bank that is indeed the case, that no, your score hasn't changed. But should you default on any of the commitments that you made pursuant to any restructuring, then obviously the credit score will get impacted, and so will your ability to borrow in the future. So that's one really important item for individual borrowers to look out for.
Okay, Mr. Khosla, just some more follow-up questions on restructuring. The biggest complaint that a lot of people did have when it came to moratorium was this whole interest on interest bit, like you mentioned in the first part. Either your EMI amount goes up post the moratorium period, and your loan tenure remains the same, or it's the other way around, where the EMI remains the same or the period gets extended. In restructuring, would the interest burden be a little lower on me compared to maybe a moratorium? And my second question is, you mentioned something about the credit score getting impacted. Was that if I do opt for restructuring, or does my credit score be untouched if I restructure my loan?
Well, answering your second question first, if you restructure your loan and you abide by the terms of the restructured loan, your credit score should ideally not get impacted. But I did say that do make sure that is indeed the case. Sometimes due to oversight, due to wrong reporting, sometimes it's possible that your credit score has gotten impacted because of this. Ideally, it should not be. So do make sure that your credit score has indeed not been impacted as a result of having sought a restructured facility. And your first question was with respect to interest on interest. Is that right?
That's right, Mr. Khosla.
Yeah. So, see, interest on interest is actually such an issue that just that phrase, interest on interest, implies has some very negative, implications as to somebody is trying to twist someone's arm. But actually, every borrowing has a cost, and any lending institution, for them, that is an income. Now, can you imagine? I think I did mention earlier that can you imagine, if, for instance, you would, Mubina, have placed possibly a fixed deposit with a bank, and you were, let's say, getting 6% rate of interest. Just as a result of the restructuring, because all those who had borrowed are getting an interest break, are not being asked to pay interest on interest, as it were, you would be said that, instead of getting 6% rate of interest on your fixed deposit, can you accept 2%? Because that's the way, otherwise the bank will not be able to balance its books. Or will the shareholders suffer because interest has been waived off? This interest waiving off, or interest on interest, if it is not charged, this is a tab which, frankly, the government has to pick up. It's like they announced a 20 lakh crore, package, or they can make it 21 lakh crore. Another, to tide over this very, very difficult time that, people are experiencing, and and they need an interest break, as it were. Then maybe that is the case. And of course, they have to be careful that it's not misused in any way. But it would be totally unfair to expect, the lender to not charge interest on interest. But then again, it's up to the Supreme Court to decide.
I think that's going to be the big debate, really. More than anything else, it's going to be 10 September, in fact, is the hearing, for the Supreme Court
Yes.
On this whole waiver of interest during the moratorium period.
But
And it's
moving
definitely
up
going to impact a lot of borrowers, more particularly. Yes, go ahead. Go ahead, Mr. Khosla.
No, Mobina, that's exactly, what I say. It's much ado about nothing, like William Shakespeare might have said, because they are two different things. Monetary policy is one thing and fiscal policy quite another. So in case there is to be a waiver of interest cost, what is popularly referred to as interest on interest, then that is a cost which, the government would have to shoulder. You cannot expect a lender or an NBFC or a bank to say that, okay, I'll write off this, because that's a cost for him. It entails a cost for him. It's actually his income which you're taking away. And quite rightly so from the point of view of the borrower, because he's unable to pay that interest. So if you want to give the borrower an interest break, the government is going to have to step in and pick up that bill. You can't expect private organizations, to pay for that.
Okay. All right. Okay. Well, like we said, we'll just wait for what, the judiciary as well has to say about this. 10th of September is the next hearing as well on this entire topic.
That's right.
And yeah, I guess today we'll be also waiting for the KVK committee report too on restructuring. Perhaps the draft guidelines of the same have already been shared with banks. But remember, this will be especially important for all those individuals who have businesses, who've taken loans, for the purpose of their business and are, of course, their business has been stuck up in the midst of this COVID-19 pandemic or has been disrupted, and hence the entire restructuring bit would come in perhaps as a reprieve, especially for corporate loan borrowers. All right, Mr. Khosla, let's talk about something which you've mentioned, and that's called as balance transfer. How essentially would that aid, our viewers who, like I mentioned, may have taken a moratorium, period is over, but they still need a loan holiday or an extension, by the time their next EMI comes due?
See, a transfer is really would be best advised, in case your loan was running on an MCLR rate as opposed to a repo-linked rate. In that case, the difference could be as much as 100, 150 beats. And then you could seek a balance transfer because you would have a lower rate of interest and therefore, you would get some relief. But, if you were already on a repo linked rate, I don't think there would be too much relief because there would always be cost of transferring the loan to another bank or another lender. You're best advised to possibly, if you're in such a tight corner, to stay with the lender that you are and seek a restructured facility. That would be a best option as opposed to shifting to another place if you're already a repo rate range.
Okay, so basically it's what we call as also refinancing. But when you are sort of, it's a switch in terms of even the interest rate regime. But Mr. Khosla, I'm sure there would be certain charges involved, right? Because otherwise everyone would be doing this. Everybody would want to move, to a repo-linked regime. Because obviously, right, in the last few months, we've seen this massive fall come by in the interest rates in the economy. We read about how SBI, BOB, all of them have now cut down their interest rates on loans significantly.
Yeah, quite a lot of the loans were already repo rate linked. They were linked to an external benchmark. For instance, Citibank links it to treasury bills. So, a lot of the lending was already linked to an external benchmark, whether repo or another one. There were some which are still on MCLR, and those were not falling as quickly, as the repo rate was falling. So that's why it made sense to transfer your loan with, to a lower rate of interest. But if you're already there, if you're already with, already getting the benefits of a low rate of interest, there's not much to gain from transferring from one lender to the other, especially in today's climate, where in any case it is so difficult for a lender to assess credit worthiness. So to expect that you would move from one bank to the other, and you were already at a repo, or an external benchmark linked rate, and you would gain some item. I don't think there's much to be gained, but there will in any case be costs entailed with transferring from one lender to the other. So that's an added disadvantage, as it were.
So just to summarize, Mr. Khosla, let's say if I have opted for the EMI holiday, my next one's going to be due in September, in the next couple of weeks, and the bank has already told me that, look, we are going to debit your next EMI.
Yes.
Of all the options that we've discussed, in pecking order, if you could just summarize, what should a borrower like me do if I'm still finding myself unable to pay my EMIs, or if I'm still a little short on cash?
Short on cash, try and sell some asset which you didn't need so badly and for which you will probably get a good price. If you're unable to do that, approach family and friends and try to raise the cash so that you're able to bridge the gap. It's only as a last resort, should you then approach your bank and seek a restructured facility, because they are duty bound to, under their own rules, under their own guidelines, each bank is duty bound to extend that facility to you. Because what was the option with the government at that time? To make another blanket, another 3-month extension of moratorium? That wouldn't have worked. That means, we are not moving ahead. So they decided to do the absolutely right thing, which is to allow restructuring for those who are affected by the pandemic, and that is your right. So if you are short on cash, please do approach your bank, try and get a restructured facility there. And if your loan account was standard as of 1st of March, there is no way that you will not get that accommodation. So that would be your last resort, I would recommend. Otherwise, try to clear your debts as much as you can, or move to a lower interest rate regime. Or if you were, if it was maybe a 36% outstanding on a credit card, look to move to either a gold loan or maybe a used car loan, which has a lower rate of interest, and therefore manage your debt appropriately. That's what I would recommend. And also, in closing, I might add, cut all unnecessary expenses. There should be no discretionary spend. It's not the time. If you're in any case hard up, now there's no point in increasing spending. Try to conserve cash. And, like they say, tomorrow's another day.
Well, that would actually be step one, especially if I'm facing cash crunch issues. I guess, and you'd be surprised, Mr. Khosla, how many people sometimes just don't do that. But listing down all your expenses, classifying them into essential versus non-essential, and bringing down non-essential to zero is literally step one of personal finance management, especially during a crisis, or if your business is facing a crisis. And yes, then just to summarize what Mr. Khosla has mentioned, first, try and pay off your loan as far as possible. If you have smaller loans, try and pay them off. If you have the loans that carry higher interest, like Mr. Khosla mentioned, credit card bills can carry very high penalties or interest in case you miss the last payment date. So even if need be, take maybe a gold loan, which would relatively carry a lower rate, and plus the loan to value of that has been raised to 90%, and gold prices as well have gone up, right? So that can help you sort of pay off some of your debt. So try borrow some money from friends, family, but as far as possible, try and bring down your debt. And then after all of this as well, if you're still struggling, then you could approach your bank for restructuring.
Absolutely
Okay.
correct.
Well, we've received questions and queries from our viewers, and folks, we've received questions and queries from our viewers, and if you as well have any queries, you can write into us on the Money Show at etnow.tv. Let's take on board our very first question. Falak Merchant says, I had opted for a moratorium for the full period, March to August, and now of course I got a message from my bank saying that the EMI with interest outstanding for the full period for which the moratorium was availed will be collected. In case of your inability to make the payment, kindly contact your relationship manager. Such a big payment will put pressure on me. What should I expect when I contact the relationship manager? Do I have any rights here, or can I ask for more moratorium? Okay, so I think what the bank is asking is that whatever interest as well has accumulated in these last 6 odd months during the moratorium period will be collected in September itself. So I understand why he's saying it's going to be quite a big amount. This is actually quite unlikely. Most of the banks sort of stagger it out. But anyway, Mr. Khosla, what would be your opinion for Falak?
Falak, my opinion for you is, first of all, absolutely cool, because you're not the only one, like they say. There are lots of people in the same boat as you, and so take heart. Number one, and secondly, it is your right, to avail of restructuring. And if, say, for instance, your RM actually has your best interest at heart when he says, "Can you make a bullet payment?" If you're able to make a bullet payment, of course, make it. It is in your own best interest. Should push comes to shove, and that you are unable to collect the money, you are within your rights to ask for a restructured facility. You will also obviously have to, abide by the bank's rules and the guidelines that they have, or the policy that they have developed for restructuring. But overall, you'll have to explain why you need that facility in terms of how the pandemic has affected your cash flows. So you'll have to prove that, and that your loan would have been good as of 1st of March 2020. That means it was current at that point, and it wasn't that it had gone bad before that, and you're now seeking to get benefit out of something. So it isn't that. You were current on 1st of March, and that your cash flows have indeed been affected by the pandemic. It is your right. It is your right to seek relief, and they will give you terms, which would be in accordance with the bank's policies. You should avail of those as a last resort.
Okay. All right. I hope, Falak, your conundrum has been answered. And yes, if you do have the capability to make a bullet payment, that's essentially what, the bank is asking from Falak as well, where basically they are going to collect the entire interest, that Falak and many borrowers as well have missed during this moratorium period in September itself. You should go ahead and do that. Okay, let's take on board our next query. It's coming in from Ravikant Ojha. He says, I have been reading about how there may be waiver of interest during the moratorium period. Now he's asking, should I wait for the same before I take forward any communication with my bank on recasting my loan? Very interesting question, Mr. Khosla. What's your view? Should viewers like Ravikant wait and see what is the Supreme Court saying, and then accordingly, take forward the next steps?
Well, Ravi, first up, it isn't a long way. It's only a few days from now, and we'll know the answer. But that should not stop you from opening up a dialogue, with your bank. Because if at all there is any refund to be made pursuant to a Supreme Court judgment, it is your right. It will be made available to you. But that doesn't mean that you shouldn't, start contacting your bank and ask them what scheme they have for you as things stand today.
Okay. Yes, I know the entire matter is sub judice, but Mr. Khosla says that should not be a reason for you to delay a communication with your bank. Start a dialogue, see what they're offering. And yes, of course, when the Supreme Court verdict comes, the dialogue is always can, accordingly be the whole situation can essentially be reneged later on. Okay, Arun Kardam writes saying that I have a loan outstanding of 50 lakh rupees on my house. Interest is on MCLR basis. He took the moratorium during 2 months, April and May, as my business was shut. Now my bank has suggested making bullet payment by December to cut my interest bill down. My EMI bill is currently 38,591 and the bank told me for the EMI to continue at the same levels, this bullet payment is necessary. So two things, just one thing more importantly, that he's taken the moratorium only for 2 months, April and May, and I'm assuming then he has sort of resumed his EMIs, and he's saying it was at 38,591, and I'm assuming even in June, July, August it stayed over here. Do you suggest, you did mention for Falak to make that bullet payment, so just to help out Arun as well, do you suggest this should be done?
Well, Arun, yes, it should be done because if we take it like what Mobina said, as in there were only 2 months, when you didn't pay your 38,000 rupee EMI, in which case the interest thereon is likely to be not too much. So just to keep things simple, if you can make that bullet payment of only it will be a small amount. Your loan would stay the way it is. Your EMIs will not be changed. There'll be no additional paperwork. There'll be nothing. So yes, your bank manager has a good idea when he suggests that whatever the interest due is on the two installments which you availed under the moratorium, please, yes, if you can defray that, do it. It's in your best interest. If you can't, then it is also within your right to ask for restructuring. And if you want to keep the same EMI of 38,000, if you think that you can repay that, it will just need an extension of the tenor by a small amount, because it's not going to be a huge amount the way that you described your situation. So I think you're in a pretty good spot.
And even if this question has occurred to any of the viewers, since we were talking about the whole interest during the moratorium period bit, if the Supreme Court does say that, look, don't charge interest on moratorium, I'm pretty sure the bank will refund you the money. They're not going to keep it with them. So even if you do make the bullet payment prior to any sort of ruling from the Supreme Court, which of course Mr. Khosla will advise you should do, don't worry, the bank will refund it to you. But it's important that you make the payment so that your credit score is not affected, and it establishes a good relation as well with your bank, especially if you do have the money. So it's definitely something noteworthy. Okay, last query for the day, and we've got it from Sridharan Arukavil. He says, since my son has been paying back his home loan EMI, the interest being based on MCLR, please advise whether he will stand to gain if he switches over to a repo-based interest regime. I guess, Mr. Khosla, you've largely answered it in the course of our conversation in the last couple of minutes, but just for the benefit of Sridharan, if he's just tuning in, if you could reiterate your call on this point.
Sridharan, yes, we did go through this earlier. But all I can say here is that the amount involved is not that much. So I think that your son should have no worries, and that if the outstanding is a small amount, it's probably better to pay off your loan right now, because if you shift to another borrower, if you shift your loan to another bank, chances are there will be some breakage in that shifting. It's only if the outstanding tenor of your son's loan is a lot, then it makes sense to shift from your current bank to another bank which has a repo-based or any external benchmark-linked rate as opposed to MCLR, because the difference is likely to be 150 basis points. So if it's a long tenure still to go, please do make that shift. If it's only a question of 6 months or 12 months at the outside, probably better to stay with your present lender, because there will be some costs involved in the shifting.
Okay, so it's not just a simple yes or no. You should keep in mind the amount involved, the charges involved, and also the balance tenure of the loan as well. If it's just a couple of months left, there's really no point really going through the hassle of sort of switching over your loan. All right, well, with that, we're done with our queries for the day. Mr. Khosla, really appreciate you joining us today on The Money Show with, all of your insights, especially for those borrowers who may still find themselves in a bit of a conundrum now that the moratorium period is over. They must be asking, what are the options before them? And for those viewers just tuning in, if you've missed the conversation, just to summarize, Mr. Khosla does say, try and repay the loan, repay as much as you can, repay the smaller amounts if you will, repay the high interest carrying loans if you will, try and borrow from your family and friends. That would be the most preferable option. But of course, if it's just simply too large an amount that you're absolutely unable to pay, then you can opt for the restructuring bit. That banks as well are offering, that the RBI has asked banks to allow. So it'll extend to the tenure of your loan by 2 years extra. Max, that is, of course. All right, well, we'll do one thing. We will take a very short break right here on the show. When we return, we will be getting on board Union Bank of India to talk about a trend that we've been observing, falling fixed deposit rates, and also, of course, his view on this entire interest situation that a lot of borrowers may have to cough up. Of course, the matter is pending on the Supreme Court, but stay tuned for this conversation.